Last week, we heard very different things from two fairly different consumer travel places, both of which you know. On Wednesday night, Airbnb reported a quarter that the market just hated, with the stock plunging 8% the next day and not coming back much since then. Then on Thursday night, Expedia reported a quarter that the market loved, one that sent the stock up 4% on Friday, and people are still saying, so what the heck's going on here? Why is Expedia winning while Airbnb's losing? Heading into last week's results, Airbnb and Expedia were mostly trading together, almost lockstep, both roughly flat for the year. Obviously, that's changed. Let's start with Airbnb. Now, despite the reaction to the report, Airbnb actually reported pretty good results. Gross bookings value up 11% year over year to $23.5 billion, which was nearly $1 billion more than expected. Wow. Revenue grew 13% year over year, also higher than expected. Their EBITDA was up 17%. Earnings per share were up 20%, also coming in stronger than what Wall Street was looking for. Only Airbnb's cash flow came in a little light. Don't worry about that. Unfortunately, what crushed them? Their guidance. Guidance for the current quarter, the most important quarter of the year for travel companies in the Northern Hemisphere, was more mixed. Airbnb's revenue forecast was merely in line, and in terms of nights booked, management warned of tougher year-over-year comparisons going forward. They also had some discouraging things to say about their EBITDA margin thanks to costly investments in new growth initiatives. Long story short, while the second quarter numbers were strong, Airbnb's guidance was more guarded, even after the company implied that July went well, which made investors worry that management was bracing itself for a slowdown. Right? If July went well, they must be thinking that August, September, terrible. And if they're going into a slowdown, then it's hard for Wall Street to get excited about these new growth initiatives, like Airbnb Services and Airbnb Experiences, which does things like tours and wine tasting stuff I thought was kind of cool, but I don't know anymore. So how about Expedia Group? They, too, had very strong numbers for the second quarter. Gross bookings higher than expected, up 5% year over year. Revenue higher than expected, up 6%. EBITDA higher than expected, up 16%. And Expedia delivered a whopping 27% earnings beat off a $3.97 basis. Hey, that's 21% growth. I like that. Now, unlike Airbnb, though, Expedia gave unambiguously robust guidance for the current quarter. Management also raised their full-year forecast for gross bookings and revenue growth. Bye. And after previously saying that they expected 75 to 100 basis points of margin expansion in 2025, Expedia now says it's going to come in at the high end, 100 basis points. Basically, Airbnb gave us what's called a beat and meet quarter and signaled that its margins would likely contract in the back half of the year. We're no longer paying up for these kinds of stocks, and in many cases, we run from them. Expedia, on the other hand, gave us outright beat and raise quarter and talked about stronger than expected margin expansion going forward. No wonder Airbnb sold off while Expedia roared higher. At the same time, you got to consider where these stocks are coming from. Airbnb is the more richly valued of the companies, trading at almost 29 times this year's earnings estimates. In other words, the ones that is the most valued was the one that went down the most. Now, their expectation, they are more than double the multiple of Expedia. That kind of tells you what's going on here, which sells for only 14 times earnings, okay? Those multiples, by the way, are after Airbnb's pullback in Expedia post-quarter. So Airbnb's almost twice as costly, all right? Needless to say, when you have the higher multiple, more is expected of you. And Airbnb didn't meet those elevated expectations, hence the decline. Now, that's a simple story. But after going through both reports, there are a couple things that I think really explain why Expedia is suddenly liked while Airbnb is very much disliked after those results. First, Expedia's online travel agency, it's got this B2B business division. While I got to tell you, Airbnb is really still just a consumer story. That's really important because Expedia's business-to-business division is the best part of the company right now. In the second quarter, their B2B units saw gross bookings growth 17% year over year and revenue growth 15%. The larger business-to-consumer division, on the other hand, had just 1% gross bookings growth and 2% revenue growth. In other words, business-to-business accounted for almost all of Expedia's growth. And that's a tailwind that Airbnb just doesn't have. The strength in business-to-business is also what gave Expedia the confidence to issue better than expected guidance for the third quarter and raise its full-year forecast. Because Airbnb is completely hostage to the consumer, though, they had to be cautious. What else? I'd say that at least right now, Expedia seems to have a clear focus on its mission, while Airbnb is still exploring new growth initiatives that may or may not pay off. Expedia is the place where people go to compare prices and find their best value for their travel options, their flights, their hotels, their rental cars, and even Airbnb-style home rentals through Vrbo. Airbnb, meanwhile, is spending big money to grow its in areas that I've regarded as outside of its core home rental business. Just looking at some of the top things announced at the company's annual product update in May, they're working on Airbnb services, which will allow guests to, for example, book a chef or a personal trainer to come to their home rental, or tack on gym access or spa appointments to their stay somewhere. There's also Airbnb experiences, which will allow guests to book guided tours or museum visits or other excursions alongside their trip. See, I like that stuff. It's also investing in an app refresh, which will make it easier to take on these services or experiences while booking a stay. See, the problem is I'm not the regular customer. All right, that's why I have to ask, will these work? Will consumers like them? Will they pay up for them? Time will tell. But remember, we are in an environment where the consumers clearly become more value conscious, and Airbnb is betting on businesses that require consumers to open their wallets. Remember, the constant theme we've heard from consumers-facing companies for almost a year now is that consumers are looking for value. Of course, I've always felt that at its core, Airbnb represents tremendous value. You get the full house experience at a price that's similar to or even better than what you would pay for a hotel room. One. But now they've gone upmarket and represents a risk. Expedia, on the other hand, is simply focused on execution. And that's working as consumers keep coming to their platform to get the best prices when they want to travel. So let me give you the bottom line of this very complex story. There's a reason why Airbnb stock tumbled after earnings, while Expedia roared the very next day. Expedia had a pure beat and raise with very little hair on it, while Airbnb had a beat, but also gave investors some reasons to worry about its guidance. Plus, Expedia's got an advantage with much more business-to-business exposure than Airbus. At the end of the day, I think Expedia is thriving because of its laser focus on value, while Airbnb is making a bunch of big bets that may or may not pay off in this environment. I say stick with what's working. I say stick with Expedia. John in Florida. John.
How are you, Jimbo? Thanks for taking my call. Very
John,
hot
I'm
in
thrilled to call.
Hometown, Florida.
All right.
Yeah,
well,
my
it's
question
air
is-
conditioning, Yeah, go ahead.
Thank God for that, Jimmy. Listen, my question is, Jim, CCL, Carnival, I love cruising. I love that cruise line. Should I wait to dip in or...
No. You can't wait. You can't wait with these stocks. They are momentum stocks, but I agree with you. They're bargain stocks, too. Royal Caribbean, people were like saying, well, listen, I'm going to wait a little more for Royal Caribbean to go down. And did you see that stock today? I mean, the people today were saying, what was I doing waiting? Here's what you do. There's always these compromise here. What you go and you buy, say, even for Royal Caribbean or Carnival, let's buy 4 or 5. If you want to buy 200 shares, let's buy 50, okay? And then see if it comes down, but you get your 50 in. Let's go to Bill in New York. Bill.
Hello there, Jim. Booyah, brother. I've been with you guys for about 25 years.
Yes.
So, Jim, listen, you got it, buddy. And great garden, pal. Great garden. Hey, listen, Jim, I'm looking at a stock. It's going to get an inevitable FAA certification. I'm looking at the buy memo of understanding to invest up to $1 billion. Looking at Joby Aviation.
Okay,
Jim,
I know Joby. I recommended it 7. Now, remember, Joby did buy a part of Blade that I think is an expensive part, which is consumer. I do believe that what they should do is raise money. If I were them, I would do a gigantic equity offering. And if you did that, then I would say that, John, that's when you got to do. That's when you got to. I'm sorry, Bill, that's what you have to do. You have to strike when the iron's hot. Let them offer some stock or let it come in. But I'm with you. I recommended Joby at 7.8. I said that enough. I see where it's going. Let's go buy it. All right, Airbnb is making a lot of bets, and it's not clear which ones are going to pay off. That's why I prefer to stick with the tried and true. I'm sticking with Expedia. Much more mad money, including my switch with Sport Radar. You know about DraftKings in Florida, but what about a data company that arms the sportsbooks with everything they need to set up the bets? I'm getting the full story from the CEO. Then we have CEOs on the show so you can make your own judgment if the stock is investable or not. One recent guest caught my attention that I think could be an intriguing speculative opportunity, if not a certainty, for heaven's sake. Wow. I'm going to reel the name. And all your calls rapid fire in tonight's edition of Light Round. There's no such thing as certain in this business, but I do like what I'm about to tell you. Stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.